In this video, we will take you through the mortgage quote or illustration document and explain the purpose of each section. Your mortgage illustration, sometimes called a key facts document, is designed to assist you to understand the terms, conditions, pay rates and fees of the mortgage for which you intend to apply. Our example shown here follows a format set out by the Financial Services Authority. All key fact documents that apply to regulated mortgage products are set out in the same way, to make it easier for you to compare products against each other. The document is set out in numbered and titled paragraphs, each paragraph referring to a particular aspect of the mortgage product. At the top of the document, you will see the name and address of the party that has prepared the document. This may be a mortgage lender, or, as in this case, the mortgage broker. This is then followed by the name of the applicants and details showing when the illustration was produced. You should note that a mortgage illustration document is not a mortgage offer and does not oblige the lender to provide you with the mortgage. As the name suggests, a mortgage illustration is purely for illustration purposes. Section 1 tells you about the illustration, mentioning the regulator as the Financial Services Authority. Section 1 points out that all firms are required to give you illustrations, and that you should obtain other illustrations if you want to compare mortgages. Section 2 sets out the service you are being provided with. In this case, you are getting a recommendation service. When you deal direct with a lender, you will see the tick in the lower box confirming that you are getting information only, and no recommendation is being made. Section 3 sets out the size of the loan you require. Where any fees are being added to the loan, they will be listed here. This section contains the anticipated valuation of the property, the term of the contract, and the repayment method. This example is a repayment mortgage, but it could also be an interest-only or part interest-only and part repayment arrangement. Section 4 names the lender and the lender's mortgage product code and product title. Listed here is the interest rate levied, the type of interest rate, in this case a fixed rate, and the period that the interest rate will be applicable. Any restrictions on the mortgage will also be listed in Section 4. Section 5 sets out the overall cost of the mortgage throughout the term of the contract. This section gives you a figure of the amount you pay back for every pound borrowed, and quotes an annual percentage rate, or APR, for comparison purposes. Section 6 sets out your monthly payment. Often, as in this case, you will see more than one line. The first line refers to the initial monthly payment, and the second line the ongoing monthly payment once the initial product rate has ended. Section 7 is intended to make sure you are clear of the effect on your monthly payments if interest rates were to rise. This section notes the increase in your payment based on a 1% increase in the pay rate. Section 8 outlines the fees payable on the mortgage and also tells you when these fees need to be paid. If any fees are to be added to the loan, this will be indicated here. Section 9 refers to any insurance that you need to take out as a condition of the mortgage. This is not always applicable, and sometimes, as in this case, it is left blank. Section 10 lets you know of any charges if you redeem the mortgage at any point. This section often refers to early repayment charges, which are levied on the mortgage if you come out of your rate in the early years. Early repayment charges are applicable to most mortgage products on the market. The box in Section 10 tells you what happens if you move home. Many mortgage products are portable. This means that, within certain terms and conditions, the lender allows you to take the mortgage with you when you move home. If your product carries this portability feature, it will be noted here. Section 11 outlines your options to make overpayments on the mortgage and sets out any charges if you do overpay. Section 12 outlines any additional features on the product. Items here may include cashbacks, free valuations, or options to switch to other products. Section 13 states any fees paid by the lender to the introducing party. Section 14 gives you contact details for the provider of your mortgage illustration. The mortgage illustration document includes a reminder that your home may be repossessed if you do not keep up repayments on a mortgage. Finally, a repayment table shows how your mortgage debt is targeted to be repaid during the term of the mortgage. Mortgage illustrations are designed to help you make a decision on whether a mortgage product is right for you. Read them carefully, and if you have any queries, refer to the person who provided you with the illustration. When you receive your formal mortgage offer, you will see that it is set out in the same way as your illustration. This enables you to compare the two, to make sure that no errors have been made. Our independent mortgage brokers are waiting to assist you. Contact us today.